Welcome back. We are now at lesson number 5. And after this lesson, you will have successfully completed your Demystifying the Stock Market introduction class. All right, in lesson number 5, we're going to talk about tools of the trade. These are the tools that you are going to need if you are going to set up your own trading business. So again, we're going to cover the tools of the trade. So let's get into it. All right, data. Data and news is important. Why is it important? Well, a lot of the decisions that you make are going to be based off of the data and the news that are coming through on a 24-hour cycle. The 24-hour news cycle will impact your trade thesis. You may set up a trade thesis on Monday. Your trade doesn't trigger on Monday. News or something occurs overnight, and the next day your trade thesis is no longer valid. So trading, understanding the news cycle and the data is important. So I use a tool called FinViz, F-I-N-V-I-Z. It's a free tool. Yes, they have a paid version. I personally use the free tool. I don't find the need. The free tool is actually so good and so robust, I don't find the need to go to their paid version. FinViz is only available on the web, on desktop. It is not done via app or anything else, so you can't download an app and put it on your phone. You can certainly, of course, access it through a web browser on your phone, but it's only active that way. So FinViz, F-I-N-V-I-Z. FinViz is very comprehensive. It's got a home page, which this is a snapshot of the home page. And what this does is it gives you a read throughout the day of what's going on in the 3 major indexes, the Dow, the NASDAQ, the S&P 500. It also gives you a quick snapshot of the heat map. Now, why I like to look at the homepage throughout the day is because this is updated in real time, the advancing stocks versus the declining stocks. So this tells me how many stocks are advancing that day and how many are declining. So this is one way that you can use FinViz to determine money moving in and out of the market. So if you're in a swing trade, that is a great way to manage and look at what's going on. This also tells you the top movers and the top decliners. So right here, it's all tied to that. And then your news feed as well. This news feed is an aggregate. So it is pulling in news from all different sources, Wall Street Journal, Market Watch, Yahoo News, you name it. So it's an aggregate news feeder. Okay. Now you look along the top here and you've got your menu here. And I'm not going to go, I didn't do screenshots of every single page because you'll be able to go into FinViz yourself and start to look at each of these different tabs. But the news, click on the news, and this news feed is all one page. So you can go through all the articles. And again, it's updated in real time. So all of your latest news is posted at the top. Screener, that's a screening tool for stocks. We'll talk about screening at a later class. Maps, that is your heat map. Okay, that is another great way throughout the day to see what is going on in the market and what money is moving where and what industries are performing versus other industries that are not performing. So the maps, you click on the maps, and that gives you a full page of what you see right here. Futures. The futures are another important tab for you to watch. So every night when the market closes at 3 p.m. our time, 6 p.m. Eastern, the futures get reset. And what the futures tell us is potentially what the stock market might do the next day. So the futures are all tied to the 3 major indexes. You've got your Dow Jones futures, you've got your NASDAQ futures, and you've got your S&P futures. So each day in the evening, you can go into your FinViz and go to futures, and you can look at the futures for the next day. And it's no guarantee that the futures are going to drive the market the next day. What I mean by that is you may look at the futures tonight, and the futures may show that the market futures are negative, red, they're down, right? The Dow Jones futures are down 100 points, NASDAQ's down 100 points, S&P is down 25 points. So the futures might be negative throughout the night. But you may wake up the next morning and the market decides not to follow the futures, or something happens and the market decides to go a different direction and the market actually rallies the next day. So the futures are no guarantee of market direction for the next day, but it will certainly give you some insight into what may happen the next day. All right. Oh, I did take a screenshot. I know it's kind of hard to see, but this is what the news page will look like, right? So all your news articles in chronological order as they get published. So you have news on the left side, and then you have financial blogs on the right side. So there's some great information in some of these financial blogs. So you've got all the information here at your disposal. Okay, here is the heat map again. Now we've already seen this before, but this is the heat map. And again, on this day, the market was selling off. So the heat map is extremely negative, extremely red, except for under specialty industrial, it looks like Han Seating, Han Furniture out of Grand Rapids, Michigan, for whatever that day was up almost 2%. Who knows why? They might have had a great earnings day. They might have had a great announcement. Most likely, when you see one company green in a sea of red, chances are that's a news-driven response. That company has released some sort of news, whether it's an acquisition, whether it's a sale, something. There's some type of news-driven event that is driving that stock up for that day against everything else. Okay, so that is FinViz, F-I-N-V-I-Z. Great tool for your data, for your news, for your futures. The next tool that you want to use is a charting platform. Now, there are a lot of charting platforms out there. All of them are very good. And also, whatever brokerage account you decide to go with will most likely have trading or a charting platform in it as well. But I've noticed a lot of them are actually outsourcing their charting to TradeView. So TradeView, again, is a free charting tool. Yes, they have a paid version. The free version is perfectly acceptable to get started with. Lots of good, robust tools within the free setup. So there's no need for you to jump in and spend money on the paid version just right away. So TradeView, here's a link for you if you decide you want to set up an account, and then you get your set up account for free, and then you can start setting up your charts. Brokerage account. So if you decide you are going to move forward and establish a trading business, you are going to need a brokerage account. And that is somewhere where you put your money that gives you access to the stock market. There are a lot of brokerage accounts out there. And again, you have to decide for yourself what is the best brokerage account that you want to use. And you need to determine what are you looking for in a brokerage account, and how are you planning on trading? What are you planning on doing? And start to ask and answer a lot of those questions, and that will start to help you determine what is the best brokerage account for you. So you need the brokerage account because that's the only way you're going to be able to trade. You can't go directly to the exchanges yourself. You have to work through that medium. How does a brokerage account work? Well, a brokerage account works to basically be the go-between between you and the indexes, right? It's where your money is stored. It's where you'll get access to your quotes for stocks and options. And they are the ones that will actually execute the order for you. Now, there are brokerage firms that charge, and then there's a lot of brokerage firms now that don't charge. When Robinhood, which I'm sure you've all heard of, came to market, their goal was, as they put it, to democratize investing. And they were offering zero cost trades and option trades. And everybody was wondering, well, how are they doing that? There's a whole methodology. They still make money. And free isn't necessarily always better, right? There's a downside to a quote commission-free trading platform. But what it did do is it forced a lot of the other legacy brokerage platforms to bring down their commissions. When I started trading back in 2008, commissions were as high as $8 to $10 a trade. Now it's I'm seeing I'm making free trades or I'm paying very little, like 50 cents a contract, 25 cents a contract, $1 to buy 100 shares of stock. So the commissions have come way down over time. So how to select a brokerage account. So in terms of selecting your brokerage account, again, you have to ask yourself, what is it that you are attempting to accomplish with your trading business, and what type of resources do you need? So, Robinhood is a very simplified platform. It's easy to use, and it's not overly complicated. A lot of traders like Thinkorswim, or they trade with the old Options Monster trading platform, which is now E-Trade. And those tend to have a little bit more robust tools in terms of analysis. But again, more complicated isn't always better, because at the end of the day, making your decisions about what you're going to trade is going to be based on charting and hopefully a framework of looking for a 2-to-1 or a 3-to-1 return on that trade setup. So the brokerage platform, at least for me, is simply a mechanism of executing the trade. My work of determining and finding trades is done outside of the brokerage platform. With that being said, as you get more advanced in your trading, looking for a brokerage account that gives you the ability to screen certain types of stocks for opportunity is a good asset to have within your brokerage account. But again, that really starts to become more advanced as you move along in your trading career, where you start actually screening for opportunities. So regarding selecting a brokerage account, feel free to message me if you have specific questions. I will do my best to answer them, but ultimately it is up to you to decide what type of brokerage account is best for you. And again, just because you open a brokerage account with one particular brokerage house doesn't mean you have to stay with them forever. You can always try out other brokerage houses. I personally have accounts with 3 different brokerage providers. So how do you open a brokerage account? It's pretty simple. You just go online to their website, you fill out your information. You do have to do what's called a KYC, know your customer. So the KYC came around after 2001. It was part of the legislation that was put into act after the September 2011 terrorist attack. And what it does is it basically, the second you fill out the account, the second you do your KYC, your information, not only does the brokerage account have it, but so does the federal government. They now know that you have a brokerage account and that you are going to be potentially investing in trading. In theory, they say the KYC is to prevent future terrorism. The reality of it is, though, that it's a way that they make sure they get their taxes if you are successful as a trader. So it's become a tool for them to make sure they get their tax dollars. But you just go online, fill out your online profile, answer the questions. Every brokerage firm is going to ask you questions, because when you sign up for a brokerage account, they are not automatically going to give you the ability to trade options. There are levels or tiers of trading levels that are granted to people. So in the beginning, if you answer that you have no experience trading and you've never invested, they will put you at the entry level, meaning you can buy and sell stocks, and that'll be about it. As you advance your career and you decide that you want to start trading options and start doing more advanced techniques such as credit spreads and iron condors and covered calls, things like that, then you will need to fill out additional documentation with the brokerage firm, and then they will grant you that additional ability to trade more complicated strategies. And at the end of the day, it's not that they really care about whether or not you make or lose money. They just want to cover themselves to say, well, they said they could do it, so we won't get in trouble. So at the end of the day, it really is a CYA thing for the brokerage accounts. One of the things that you also need to look at when opening your brokerage account is having paper trading ability. So there is a philosophy around paper trading. Paper trading is not a bad thing. It's a great way to get started when you want to learn how to place trades, how to use the brokerage platform itself, how it works, and to test out whether or not your education and your trading plans are headed in the right direction. So having a platform that gives you a paper trading ability to start off with is very good. Now, with that being said, there's a philosophy out there that you want to paper trade until you get X amount of winning trades, then you go to money. While there is no doubt that, the right perfect practice will help. But because we're dealing with money and because we're dealing with emotions, paper trading doesn't give you the same experience as trading with real money. And by no means am I telling you to take money, throw it in the stock market, and start trading. You definitely need to have the education and be comfortable first, and be willing to not take on more risk than you can manage. And definitely, whatever you start trading with, you need to go into it with the mindset of, I'm putting $1,000 into my brokerage account, and I'm okay if I lose all $1,000 tomorrow. Now, that's not the plan if you follow a Disciplined Trader Academy philosophy and you follow a trade thesis and you follow risk management, you will not blow through that $1,000 because you are going to have good risk management principles in place. But you still need to go into this with the mindset of, I'm putting $1,000 in my brokerage account and I could lose all that money tomorrow and we are still fine. My point being is this: there is emotion tied to trading. When you are paper trading, you don't have any emotion. You have nothing at risk. So with paper trading, it is possible that people will tend to take more risk. They will make bigger trades. They will do things in the paper trading that they won't normally do when there's actually money at risk. So the paper trading can give you a false sense of security and a false sense of confidence that doesn't translate into real trading. So my recommendation is you definitely want to paper trade and utilize it for what it's worth. Understanding how to utilize the platform, test some strategies, get your feet wet. But you will want to determine when you're ready the time to start putting some money into the market. And nobody says you have to put tens of thousands of dollars into the market to begin with. In fact, I say don't do that. There's nothing wrong with buying 1 share, 3 shares, 5 shares, because it's about learning to trade well. The profits will follow, right? So it's practice to profits, because what you buy today at 1 share, that philosophy, that trade thesis, that strategy is the same whether you buy 1 share or whether you buy 100. So adding on more zeros doesn't necessarily change it. Yes, the potential for loss is greater, but if you're going to follow the same risk mitigation principles. So buying 1 share, $100 of a stock, very low risk. And if you can make that trade thesis work, then you do it again, and then you do it again, and then you do it again. And you're trading real money in very small increments so that you can start learning what the emotional feeling is when it comes to trading. So you can learn to manage the emotion alongside trading money. Because even if we're only trading $50 or $100, you're gonna feel the anxiety and the angst that goes with it. So that is my advice on paper trading, how it works, and when you want to consider transitioning to actually funded trades. Again, if you have any questions on Brokerage Account, feel free to message me and I'll do my best to help guide you. That wraps up our 5th and final lesson of the Demystifying the Stock Market digital course. So I really hope you've got a good foundation here in which to get started. I hope you're excited about continuing your stock market education, that you want to learn more, and that you are on your way to starting your path to financial freedom. So in this lesson, we covered FinViz, right? That's your free financial news and data platform. We talked about TradingView, a free tool for your charting platform. And we discussed understanding and how to choose a broker. So really hope you've enjoyed this course. That is a wrap. We are done with this course. So if you're looking to start your own trading business, you are welcome to join the Disciplined Traders Academy forum and supercharge your education. So when you become part of our community, you're going to get my weekly trade setup watch list, which is going to go out Sunday night or Monday mornings. You'll get real-time trade alerts. You're going to get 1 weekly group trading mastermind call, and you'll get continuing Disciplined Trader Academy education. This is $97 a month. Your first month is only $1. So you can join us, see if you like it, and if this trading business is for you. And if not, you can cancel at any time. So if you're interested in joining the Disciplined Traders Academy forum, just drop me a message and we will get you set up. All right, that's a wrap. We hope you enjoyed it, and we will see you for the next class.